Hello, this is Dan Solender. I'm Director of Tax-Free Fixed Income and a partner at Lord Abbett. We're off to a very good start this year in the municipal bond market. So far this year, everything's really working well. So far, some of the big things going on are that demand has been strong, supply is on the lower side, credit quality is holding up well. Everything really started to turn even more positive back in November when the vaccine became known and the expectation came up that it was going to be disseminated, which has been a big turn. And then the bigger trigger more recently has been the Biden administration wanting to put through a large fiscal stimulus package, which is working its way through Congress. We think all that put together gives signs that the economy has a light at the end of the tunnel, because when the vaccine gets disseminated, more people can obviously return back to normal. And the fiscal stimulus will target a lot of parts of the municipal bond market that could use the funding. It's not just the state and local governments, they get the biggest attention, but it's also things like airports and hospitals and universities and school districts. All kinds of things can get funding from the fiscal stimulus to help them through this time. And one thing we've seen over the last year is that expectations got really, really low back in March, April. Expectations of where tax revenues would come in, expectations of how credit would perform. But now that we've gone through this time period, we've seen that revenues only dropped a little bit, not that much. The states are holding up much better. A lot of the things like airports, toll roads have much better balance sheets than people expected. And with the help from the original CARES Act, they made it through okay. So a lot of things are holding up just like that in other sectors as well. So as we get to this part, as we get into February now, we're seeing this year the best performing part of the market has been lower quality, which really lagged last year. When you look at actually their flows into funds, municipal bond funds in 2020, they were actually the fourth highest in history at about 43 billion, but high yield municipal bond funds actually were net outflows. Now that's turning positive. Flows are coming in across the board in all different types of maturity, long, intermediate, short, high yield, investment grade, separately managed account fund, everywhere. So the demand has been good as people are getting comfortable with this economy and looking at the relative value versus other markets and thinking it looks good. So that's one thing. And then the fiscal stimulus is the other. And then the supply, we are seeing a time period when supply is not that high. And we even last year looked like supply was high, but in reality, a lot of it was taxable municipal bonds in reaction to the previous tax act a couple of years ago. So looking forward, demand is good, supply is good, credit is held in and is doing better. We see a light at the end of the tunnel. We performed very well this year, but there's still room to come back even further versus where we were a year ago before the pandemic. So the outlook just looks good. Municipal bonds are off to a great start. We appreciate all the interest everyone has shown in our products. So thank you for your time. Thank you for your interest in our firm. And we look forward to seeing what comes out in the fiscal stimulus and looking at how the rest of the year unfolds, which seems pretty good right now.